Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. ICE Brent crude oil futures. An interesting key reversal down and third bearish black crow yesterday, as it was firstly the second daily key reversal down we've had here in this market this week. And secondly, it set up the situation for this week to be a weekly key reversal as well. So, if we close tonight over 85.83 or under 83.16, then we'd be on. Right now we're looking at a weekly key reversal down in this market. What this also highlights is whether we will finally have a move based on the well-broken December 2022 to February this year sideways triangle, which is highlighted in dark blue on my daily chart. I've been often tempted to redraw this pattern to something else, but I've still kept faith with this sideways triangle as I think it best describes the current situation. Yesterday the market closed down below the extension of the upper trend line for this pattern, currently at 81.65. So I'm now looking as to whether the market will finally take on this pattern and head in a specific direction. So looking above the market anyway, we still have as resistance the October 2018 high at 86.67, the medium moving average currently 85.58, as well as the 50% Fibonacci line on November 2020 to March 22 move at 87.41. Interestingly, the market also closed below the nearby support of the 61.8% Fibonacci line of the old 2014-2016 move at 81.86, which basically could be turned into resistance. This leaves us little heavy-duty support below the market until the 50% Fibonacci line of the April 2021 to March 22 move at 77.54, bar the lows of February 80.40 and 79.10. I will not place any potential targets below just yet for the sideways triangle. This is way too early for that, but I will consider doing so if we have a weekly key reversal down this week. Now, so far today, a small continuation lower, below the downtrend extension and approaching the first of the February lows. Spot gold. We have here a possible 3-day bullish morning doji star pattern, with yesterday being day 3. It's all part of a longer-term piece of action. You see, last week was a weekly key reversal up, a somewhat unsurprising reaction to the market dropping down earlier last week down to and testing the combination of the neckline of the December 2021 to July 2022 head and shoulders top, and that's currently at 18.07. And then also the rising medium moving average, currently 18.12, and the congestion 18 also 18.07, seen in June and August last year and December this year. And the market dipped down to this support as a reactionary move to last week's weekly key reversal up, and then shot straight up with this 3-day pattern. Overhead, we now have the 50% Fibonacci line of the whole of the 2022 move at 18.42 and this week's high at 18.58. But I suspect that high was made by the market shying away from the next real resistance overhead, and that's the rising short medium moving average, which is currently 18.66. Well, so far today, a small move higher, which is, I suspect, may be caused by the overhead resistance bearing down on the market of the 50% Fibonacci line at 18.42. Bearing down, it's not actually moving anywhere, but it's just there above the market, and that's why we've had only a small move so far today. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.